Hey everyone, this is Dr. Duru from Ahan Analytics with the market breadth. The stock market is back to where it started before all the tariff trauma and drama. So, all is well? Well, that remains to be seen. All right, so let's timestamp this one, May 2nd. This is after the market is closed. Here are some of the major headlines on Yahoo Finance. This is the most important one here. S&P 500 wipes out losses from tariffs in historic winning streak. I heard separately that the S&P 500's current 9-day winning streak is its longest since in 20 years. That's pretty incredible. And there are going to be some implications to that I'll cover in the technical section. And remember, before I continue, to like and share this content. You can you can subscribe to this channel if you want to get notified when there's new content. And I always appreciate questions and feedback down below. Okay. So some other big headlines are more company specific. There was a jobs report today, but I don't see any headlines related to that. I think the jobs report came in just fine. Oh, here it is. The U.S. Labor Secretary reacted to the April jobs report by saying the golden age in labor is here. Actually, don't pay much mind to that. The people in the administration, no matter what party, are always hyping up the jobs report, no matter what the result is. So that's a pretty empty headline. So anyway, the jobs I think the economy created about 177,000 jobs, so pretty good. Fears of a recession are definitely put on hold. Okay, so let's jump over to market breadth, my favorite technical indicator, which is the percentage of stocks trading above their 50-day moving averages, what I like to call AT50 for above the 50. Um, so you're seeing here market breadth as well has been on a winning streak. Let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9. Yep, 9 days up, straight up. And in fact, if we want to go all the way back to the bottom, market breadth has only been down 3 days since the absolute bottom here on April 8th. So this is a pretty incredible run. And the implication here is that to run this much, it takes a lot of buying effort. And now you can see market breadth is actually getting a little stretched here. It's well above its upper Bollinger Band, which means it's stretched in terms of standard deviations from the average or the 20-day moving average. And right above here, sorry, the label is gone. Here we go, is overbought. So suddenly I am now looking at this market getting overbought, which is the 70% level on AT50. At this current rate, we could be overbought. The stock market be overbought by the end of the coming week. But I'm suspecting this 9-day winning streak is going to have to take a pause very soon. So maybe the stock market gets to overbought in 2 weeks. But that's just a big guess. Who knows? And of course, I'm not making predictions, but providing this for educational purposes. Use your own time horizons and risk tolerances to make your own decisions on trades. Okay, so let's go to AT200, which is above the 200. And this is the percentage of stocks trading above their 200-day moving averages. And you can see that it still has a long way to go before it breaks its downtrend, which is defined by lower highs and lower lows. But this is a relatively orderly march, even though it's not too dramatic, but it's a relatively orderly march from the bottom. So it's constructive, even if it hasn't quite confirmed the bullish recovery in the stock market. Okay, oops. Let's go to Sorry, let me get that. Okay, let me change the indices. Okay, now lots of positive developments here, and let's step through these one by one. So the S&P 500, as you can see, is not only did it break out above its 50-day moving average, which is this red line, but it also confirmed the breakout by making a second close above that breakout line. And now it's already close to challenging its 200-day moving average, which is the blue line. Now, remember, for me, the indices are still in bear markets because they're below this line. So this challenge coming so soon is very important and it's pretty monumental, even though right above that is once again this line, which it represents the close of the market right on election day. And you could see how it served as support here in January. But then once it broke down, this began the overall bear market. This was back in early March. And then look at that perfect test of that resistance right at late March. And that was all she wrote for the rest of this tariff drama. So you can see now where the S&P 500 is, which is around, let's see, what is that? About 56.83 or so. It is right now right near the top of what I called the bear market first area of agitation. So anyway, I think most important resistance is 200-day moving average and then the close on election day. So I expect this resistance to be really tough. So I have already downgraded my short-term trading call to cautiously bullish. Once we get to this level and test, I'm going to have to switch to neutral. Actually, I don't have to, but if it rushes through this resistance, then I can stay cautiously bullish. But anyway, this is a pretty steep climb. There's got to be a rest coming soon. Actually, I shouldn't say gotta, but I won't be surprised if there is a rest coming very soon. Okay. Story is similar with the NASDAQ. Again, it's as if all is well. It's confirmed a 50-day moving average breakout. It is closing in on testing 200-day moving average resistance. And this resistance as well is going to converge right with the 200-day moving average. This is the last peak before the tariff trauma and drama erupted. All right. Now, small caps. The iShares Russell 2000 ETF, ticker symbol IWM, broke out above the 50-day moving average. It's positive. We just need one more close to confirm it. I went ahead and just took profits on the call spread that I talked about earlier, and I'm really wishing that I had been able to double down when IWM fell down to this level around 190.85. But oh well, such is life. So anyway, small caps now are looking much more positive. I do hold shares in my portfolio for longer term hold. So the bear market, this latest bear market is starting to be fade into the past for IWM. All right, now let's look at the VIX. Volatility index is continuing its steady downtrend. It closed at 22.7. That means it too has returned to almost right before the tariff trauma and drama started. So that's a pretty good development that supports bullish action. Once it gets below 20, then volatility will be considered no longer elevated. All right, let's take a quick look at some individual stocks. IGV, the iShares Expanded Tech Software Sector ETF, is even more bullish than the indices I just showed you. It's broken out above its 200-day moving average and confirmed. So I'm looking at it streaking right to testing the double top from February and last December. So actually, I want to be a buyer here. I should have actually bought it right in here, but I missed the breakout. I'm just now looking at it. Shake Shack, I pulled up just because a lot of these casual dining or restaurant or fast food places have been doing really poorly. Shake Shack had a pretty decent earnings day. It popped, what is this, 6.4%. It's above its 50-day moving average. So looks it's a buy for me with a stop loss below, say, this last candle at around 88.50. But I'm hoping it'll pull back just a little bit back to 50-day moving average. I'd love to buy it around 92 or so. All right, Nvidia, I still claim that it has many months to go, basically without challenging its bearish engulfing top. But Friday, today was a very positive day, 2.6% gain, and it broke out above its 50-day moving average. So for me, Nvidia is I don't even need to wait for it to confirm. I did have a position that I sold today, took profits on today, but to next week, if it pulls back a little bit, I will be right back into it with presuming that it will run up to challenge its 200-day moving average. FICO, otherwise known as Fair Isaac Corporation, is one I talked about a long time ago. It was one of the few strong stocks that I dared to buy during right after the tariff drama, and it survived earnings. And look, it survived its 200-day moving average, and it looks ready to resume strength. So I'm really happy that I loaded up on FICO and hung on there. Microsoft had a fantastic earnings report, as I mentioned before. Ended up gapping up. Let's see, what was this? Man, made a 7.6% gain. Actually, it was a little off. I think it was up as much as 9 or 10% in the after hours after reporting earnings. But buyers made up for lost time by pushing Microsoft even higher, 2.3%. So post earnings, Microsoft is already stretched. Now it's super stretched. But the important thing is it's validated or confirmed a 200-day moving average breakout with two successive higher closes. Sorry, with two higher closes. So it's a buy in the dips for me, but I don't want to buy it way up here. I'd rather buy it closer to 200-day moving average as support. Intuitive Surgical was one of those stocks that was above its 200-day moving average ahead of the tariff drama, and I went ahead and got in and I hung on there, and I'm glad I did. Now the stock has confirmed a breakout above converged resistance at the 50-day and 200-day moving average. So I am happy I bought and hung on to that one, and I'm looking forward to Intuitive Surgical, ISRG, resuming its uptrend. And finally, there is CAR, ticker symbol CAR, or Avis Budget Group. Back here during the tariff drama, I had claimed that this was not a buy, and that the folks that were rushing in because of tariffs and assuming that used cars would be flying off the shelves and benefit a company like Avis Budget Group. I claimed that wouldn't hold out, but sure enough, Carr went ahead and proved me wrong. Look at this. It soared on April 17th, 16.4% above the 50-day moving average. And now, if I have to be fair, it's confirmed now a 200-day moving average breakout, and it's in bullish territory. Earnings are coming up next week, so I am going to be looking at this one closely. I still don't want to buy it, but I'm just very intrigued by this bullish action in a stock like CAR. Okay, so once again, if you want content like this, you can just go ahead and subscribe. You'll get notified. Please like and share so the algorithms know that this is content others should see. If you have questions or comments, put them down below. Otherwise, you can check me out at my blog for more details at drduru.com/122, all letters. And I will check you out the next time. Thanks for stopping by.